deadly charm in the night.
Never see someone so fine. Never see someone so fine.
Everybody. Thank you so much, and apologies for the late start. I believe we should have kicked off at exactly 11, but we had to give ourselves some time to get enough quorum, especially for our online participants. So good morning to you once again. Welcome to the 2022, the year ended 2022 annual general meeting for the UAP Life Umbrella Retirement Benefits Scheme. My name is Ramla Nantongo, and I represent KCB Bank, who are the trustees for this scheme. It's exciting to finally have a hybrid event, isn't it? Yeah? It's been over 3 years of us not seeing each other, hello, can you hear me? My network, my this, yeah? But so happy that we finally get a chance to meet, and I hope that next year it will actually not even be hybrid, it will fully be a physical one. To our online members, thank you for joining. It shows your interest in wanting to know what's happening with the scheme and how it's being managed. Before we start off, I would like us to have a word of prayer, and I'll request John Paul to to lead us, please. Thank you.
Thank you. Let's pray. Father in heaven, we bless you for yet another wonderful day to gather together. We ask that you be amidst us, and that whatever has brought us here may be fruitful to whoever we serve. We ask for your guidance. We ask for your presence amidst us. Guide us, be with us, and protect us each and every day of our lives. We bless your name. We praise you every day. In Jesus' name I believe and pray.
Amen. Amen. Thank you so much, John Paul, for the prayer. So before us, first I'd like to introduce the service providers of this scheme. So myself, Ramla Nantongo, I'll be chairing, and I represent KCB Bank, who are the trustees. We've got John Paul. John, please introduce yourself.
My name is John Paul Otadokir. I am the administrator to the scheme. Okay. UAP, Old Mutual Life Assurance.
Okay.
Thank you. Jerry Okulo here. Represent the finance department from UAP Old Mutual Life Assurance. Yeah.
Good morning. Pauline Kansime here from Housing Finance Bank, the scheme custodian.
Yes, morning everyone. Kevin Lugomvu, representing the fund manager, Old Mutual Investment Group.
All right, thank you. So those are our service providers, and a huge round of applause for the work that they do. Yeah. I think without them, the scheme wouldn't be able to run the way it's meant to run in terms of compliance, in terms of governance. So first and foremost is just a big thank you to all our service providers. Thank you for all that you put in to see that our members get return of investment. Okay. So next, I'd like us to look at our agenda. Okay. Rita. Sorry? Okay. So that's our agenda for the day. I would like a proposer and then a seconder. Perhaps someone from the physical audience and then another from the online audience. You propose, thank you. Okay, second. I guess there's also someone else online. So we'll adopt the agenda. There's an item there under 12, and I would like the administrator to confirm, did we receive any matters to be addressed under AOB in the last 48 hours? That's our requirement in terms of AOB.
No, we did not.
None, okay. All right, so we will go ahead and adopt the agenda. We'll move straight to agenda item number 2. That is the communication from our sponsor, who is attending online. Who'll be the representative from the UAP? Yes, who is that? Okay. Patrick, can you hear us? Yeah. So Patrick, who is the managing director of UAP Life, will be giving the communication from the sponsor.
Everybody, I welcome you to this meeting. You can confirm I'm audible, although some echo.
Yes, we can hear you loud and clear.
Great. Thank you so much. So, as I've been very well introduced, my name is Patrick Kimathi. I'm the managing director of UAP or Mutual Life, and who happens to be both the administrator and sponsor, but now I am representing the sponsor. Apology, I could not be physically in the meeting. I had to attend another meeting in South Africa, so allow me to address you from here. So it gives me pleasure to welcome you to the annual general meeting of the UAP or Mutual Umbrella Retirement Scheme for the year ended December 2022. So the scheme was established in 2015 and has continued to grow. And as you're aware, prior to the establishment of the UBRA Act, the Mocho was offering pensions as products through the regulatory regime by IRA. In compliance with the UBRA Act, we established the scheme under the Revocable Trust, proceeded to draft the scheme documents as required, including trust deed and rules. And as you're aware, under the UBRA Act, the role of the sponsor is limited to setting up of the scheme and the establishment of and then appointment of trustees, who then take over the mandate of running the scheme as per the requirement of the Act. KCB was appointed, and they remain our corporate trustee of the scheme, and we appreciate the work that KCB has done over the years, as well as the other service providers who were appointed to offer the services to the scheme. As a sponsor, we are happy to note that the scheme membership in terms of participating employers has grown from 20 when we established the scheme in 2015 to 52 members in 2022. And a number of other institutions have already signed up to join the scheme, and the administrator and other service providers are doing their best to ensure that the scheme grows faster than the sector in general. This is a testament of the expertise of the service providers, the trustees, and there's faith that you as the members and other prospects have had on us. And thanks to the work that has been done by the fund manager, the custodian, and the trustees in the investment management role, I am happy to note that the scheme has consistently declared above market rates of return. This is, again, testament of the professionalism and the agility that the service providers and the investment group for Old Mocho, which is a fund manager, have done in ensuring that their duties have been well executed. And we call upon you as a participating employers, the management committees, and the member representatives to be our ambassadors for the scheme as well. We are very well briefed that the trustees have continued to ensure that the scheme is well managed in line with the provisions of the trust deed and rules, the UBRA Act, and the regulations as required for this sector. We therefore give confidence as a sponsor that your funds are in good hands, and the service providers will continue to improve their service offering for your benefit. We are cognizant that the operating environment has not been easy, both from the macro economic space as well as regulatory front. And we note that the regulators continue to issue guidelines. The regulations ensure that members are safe, funds are safe, and good returns are offered to you as, because for your retirement. We are mindful that retirement funds are hand-earned funds, and therefore they require to be well managed. Our message to the regulator is that as a sponsor, it is always to be mindful of the cost of the compliance, and we are happy that I believe the regulator is representing this meeting. As you've seen, a number of service providers, especially fund managers and administrators, exiting the market, especially because the earnings from this sector have continued to dwindle based on the expense that they're incurring in running of the services. So we pray for greater collaboration with the regulator to see how we move the industry grow together for the benefit of the providers, the members, and even the service providers as well. We wish to convey a message to the members who exit the scheme, because we know we've seen a number of people exit, as will be presented by the administrator, that we have our other local subsidiaries, that we have other products that you can transfer your funds to, so that you can continue earning a return. As we know, even if you exit, probably because you've got another job, your dream for retirement and needs still remain. It is good for you to keep that money. As you know, once you get it, you'll utilize it, and then your dream for retirement will be at risk. So we'll be happy to discuss with you the available options. And we also want to encourage you to patronize on our products that we offer, like group life assurance for your employees, our education plans, medical insurance, and all other benefits that are available for both individuals and for corporates. Otherwise, we want to thank you for this, for being our members under the scheme, and thank you for continuing to patronize on our services, and thank all the service providers for the good work they're doing. And therefore, I wish you good deliberations during this annual general meeting. Thank you, and back to you, Chair.
That's the Managing Director of UAP Life and also representing the sponsor of this scheme. A round of applause, please. Yeah, some of the pointers or, comments that were made by the sponsor, I think what is quite critical is that despite the volatile economic environment, he's giving you assurance as the members that they will continue to give you a good return. And indeed, in the past, we have seen UAP declare interest higher than the market. So that's a guarantee that your funds are very safe. Okay, we will move to agenda item number 2, which is the communication from the trustee, and I will give that communication. So on behalf of the board of KCB Bank Uganda, once again, I welcome you to this annual general meeting. So just a little bit about KCB. We are a regional bank. We've been in Uganda for about 15 years now. You might wonder why KCB as the trustee. We've got a wealth of experience in this area in the both trustee and custody business, both in all our regions. Our head office is in Kenya, so we do that business in Kenya for the last 100 years. We've got presence in Rwanda, Tanzania, Burundi, Rwanda, and just most recently got into the DRC. So we ride on the strength of that regional experience. Okay. First and foremost, I'd like to again thank our participating employers, those that are here physically and those that are online. The scheme is nothing without you. The reason that we are all here is because you have agreed to work with us. So we would like to take the opportunity to really thank you for entrusting us with your funds. Special thank you also to our service providers that we introduced earlier, because they help to run the scheme efficiently and within compliance. And a special thank you as well, of course, to our regulator, UBRA. It is through their guidance, on a daily basis, on a quarterly basis, that we are also able to ensure that we are running the scheme efficiently, that we seek their guidance where we need any clarification, especially some questions that do come through the members. So we would like to also especially thank our regulator. So as a corporate trustee, what is our role? Our key role is to ensure that the scheme is being run at the highest standards, especially in terms of the guidelines as given by the Uganda Retirement Benefits Regulatory Authority, who is the regulator of all pension schemes in Uganda. So we do take interest in ensuring that, number one, on a quarterly basis, we are checking in. How is the scheme performing? How are the service providers performing? Are the employers aware of what is actually going on with the scheme? Okay, so that is one of our key roles. So looking at the performance of 2022, and I think it was slightly highlighted by our sponsor, it was a volatile environment, in terms of investments. So some of the areas where we usually used to invest quite a bit, for example, the space of equities, we saw equities really take a dip. And this is usually driven by, election periods. We tend to see that. So there was a dip in equities. So that meant that our investment managers, or what we call our fund managers, we had to really think to ensure where do we place funds in the, safe investments, but also giving good yields. So we will hear from the fund manager who will give a bit more detail there. But generally speaking, there was a bit of volatility in terms of the economy. Looking forward, obviously, yesterday we did listen to the budgets. We take an approach that is quite, we take an optimistic view of what's going to happen. We do expect growth in the region of about 6 to 7%. But of course, there are some investments that might not do, very well. So again, for us, it's ensure that we are placing the funds in the highest yielding, assets. Then when we look at, we still expect a bit of a spillage of the impact of the Ukraine-Russia war, because that still continues. So again, it's just to continuously watch what's happening in the market and then make quick decisions in terms of where the investments will be placed. In 2022, we did maintain the service providers that have been managing the scheme. You did hear that the scheme has been running since 2015, but so we maintained the service providers that were running in 2021, we maintained them in 2022. So that's UAP Old Mutual Life Assurance as the fund administrators, UAP Old Mutual Financial Services as our fund manager, and then Housing Finance Bank as our custodians. We did appoint Thomson and Company as the scheme auditors upon the lapse of the audit period for MAM Associates. So we do have a requirement to switch auditors after a specific period of time. So we did comply with that and moved from MAM Associates to now Thomson and Company. Okay. So overall, that was the outlook last year and what we also expect this year. But the guarantee that we want to just give you, our members, is that we will continue to provide you with a good service, ensuring that your funds are safe and to invest them wisely and into the higher yielding assets. So once again, I thank you for being here, and I hope that you will all participate. Our online members, please don't hesitate. Drop us any comments in the chat, any questions in the chat, even as we go along with the presentations. So we'll continue to ensure that we provide you with a good service and safety of your funds. So thank you for being with us, and enjoy the rest of the meeting. So we will move to agenda item number 3, which is agenda item number 3 will be the report from our custodian. Okay.
Thank you, Chair. I request confirmation that I'm audible. Thank you. Okay, as earlier introduced, my name is Pauline Kansime. I work with Housing Finance Bank, the scheme custodians. I'm delighted to be here, and just like Chair said, without you, the participating employers, we wouldn't have a job. So thank you for entrusting us with your funds, and we look forward to a fruitful partnership. On behalf of Housing Finance Bank, I'm going to present the report for the year ended 2022, and I'll walk through our role, just a brief introduction on who we are. I'll also speak to the fund movement, and as I close. So for last year, I'll just start with the introductions. Housing Finance Bank has been in the market for the last 54 years. We are an indigenous bank, and originally our cash cow was mortgages, but we have since transitioned into a fully fledged commercial bank, and we also have other products that we offer besides the mortgages. We do trade finance, thank you. So we do have a variety of products that we offer. as Housing Finance Bank. So our purpose is to enable home ownership and financial independence, and our vision is to be the preferred consumer bank with a focus on housing. Our mission is to provide efficient, innovative, customer-centric services, and here we are aiming to maximize stakeholder value. And then our values are excellence, respect, integrity, and customer centricity. As Housing Finance, our partners are NSSF with 50%, So NSSF with 50%, Government of Uganda with 49.2%, and then National Housing and Construction Company with 0.8%. Just to give you comfort, our members, we are heavily regulated, and we are also duly compliant. We are compliant with our banking regulator, that's Bank of Uganda, with the BOU license. We also are licensed by the Uganda Retirement Benefits Regulatory Authority, that's UBRA, for the pension business. We also are licensed by Capital Markets Authority, where we still offer custody to collective investment schemes. And then we are an agent at the Uganda Securities Exchange, where we transact equities for the fund. Our clientele are spread out in the different sectors in the economy, microfinance institutions, banking, insurance, umbrella, informal sector. So we have coverage in all the sectors when it comes to the economy. And just in a snapshot to show who some of our clients are, I'm sure some of these logos are familiar to some of us. Maybe I'll just mention a few. We have UAP, Old Mutual. We have Sifao Motors, Post Bank, Exim Bank, the Mazima Retirement Plan. This is on the informal sector side, Finance Trust Bank, UBA, just to mention a few. So I'd like to draw your attention to the framework of the pension sector. So we have the fund, which is the UAP umbrella fund, with the service providers that have been introduced to you. We have the trustee, who basically gives oversight to the scheme. We have the administrators that take care of the records. You have us, the custodians, who safekeep your assets, and then the fund managers that invest the monies. And all of us are supervised by UBRA, who is the pension sector regulator. Move on to our role. You might be wondering why all these service providers, why do we need a custodian on top of the trustee, on top of the fund manager? Why do we require a bank? So one of our roles is to settle trades. So once the fund manager has scouted the market and has settled for a high-yielding asset, it's our role to move monies from your custody account to secure those assets. We also receive your contributions on a monthly basis. We keep your assets. We do this in segregated accounts. And then we do collect investment income for all the assets that we're investing in at the point of maturity or when things like dividends are declared. It's our role to collect this investment income, make sure it's paid accurately and reinvested. We also do reporting, which we do on a quarterly basis to update the trustees and also annually to you members. Then we also pay benefits to members that are exiting the organizations. So to briefly touch on the numbers, as at the start of last year, the fund stood at 25.8 billion. At the start of 2021, the fund stood at 25.8 billion. And through the year, we registered a growth of about 5.9 billion. The fund grew from 25.8 billion to 31.7. And then contributions, we also saw an increase from about 9.3 in the previous year to 14.8 in the year under review. Then on the expenses, we noted a reduction from 332 million to 303 million. And then on the withdrawals, there was also a spike here from 5.8 to 11.4. And on income, we also registered growth of from 3.2 billion to 3.6 in the year under review. And that's how we closed off at 38.2 billion, growth of about 7 billion for the fund. So where was the money invested? We note, as at close of last year, we had cash of 187.3 million in account. 4.4 billion was invested in the fixed deposit asset. Treasury bonds took the bulk of the funds with 28.7 billion. And then equities, these are both on the local and the regional markets, 1.1 billion. And then the money market fund, or the UAP umbrella unit trust, with 4.3 billion, and that's what made up the assets 38.8 billion as at close of 2022. Members, just to reassure you, as Housing Finance Bank, we pledge to keep your money safe and to also keep giving you good service in terms of payments. Our members are exiting, and for any other inquiries that that you might have, and also to support the rest of our stakeholders. That's the end of my submission. Thank you for the audience. I'll take the questions in a Q&A session. Thank you.
Thank you so much, Pauline, for the report. I believe it was quite clear in terms of where we started, how we closed. I think Q1 for me there was expenses dropped. So as a member, you want to know that expenses are not, going upwards. So I think that's a good thing. And the online audience, feel free to drop whether comments or questions. We'll handle that under the Q&A segment as we go along. So let's hear from our fund manager.
Yes. Good morning, everyone. My name is Kevin Lugomvu, and I'll be representing the fund manager, Old Mutual Investment Group. So my report will just give a brief overview of who we are and what we do, discuss the macro events of the year, which will then speak into the overall return that was declared, talk about where the assets were invested, then lastly, discuss our outlook and strategy for the remaining part of the year. So, Old Mutual Investment Group, previously known as UAP Old Mutual Financial Services, is part of the wider group, Old Mutual Group, and we're the investment wing. So basically what we do is we offer a number of services in the investment industry, which include pension management, like what we're doing for the fund, unit trust management, and also brokerage services. Now, particularly for the fund, the services that we offer the fund, so as fund managers, our role is simple. We invest the funds on behalf of the members. So we do this in line with the investment policy statement, a document that is provided to us by the trustees, but also in line with the UBRA guidelines. So our role is to ensure that we generate the best return possible for the funds given the market, and make sure that we beat the benchmarks that are set by the trustees. We do liquidity management, and this is ensuring that once the fund has to make payments, if a member is leaving, there's need to pay expenses or taxes, this is done in the quickest time possible, and our commitment is usually T+2, so within 2 days, we usually try as much as possible to ensure that the settlement is done. We do reporting, and on a quarterly basis, we meet with the trustees, and in these meetings, we discuss where we are investing the funds, our outlook, strategy, and performance. So I'll then move on to the macro events, and this will then speak into where the return that was generated came from. So when you look at inflation, generally 2022 saw a huge rise in prices, with inflation peaking at about 10.2%. from a low of about 2.7 the previous year. Obviously, this was driven by the effects of the Russia-Ukraine invasion that saw commodity and oil prices rise significantly. What we've seen this year is that prices have started coming off, and as we speak, headline has dropped to about 6%, as some of these disruption in supply chains have been easing, with China opening and oil prices dropping. So our outlook is that we could see inflation go back to a target of 5% in Q3 of this financial year. When we move on to interest rates, we saw that during the year, the CBR went to 10% from a low of about 6.5%, and this was in line with the central bank policy to restrictive policy as inflation rose significantly. And what we are seeing currently is that as inflation starts to come down and the shilling being relatively stable, we've seen that the CBR has been kept at 10%, but however, we've seen a drop in interest rates. I'll move on to currency. And when you look at the UGX, overall, the UGX during the year did perform relatively better than most of the regional currencies. However, it did depreciate about 5.8%, and this, of course, was driven by the high prices in the high oil prices, but also there was a large offshore exit given the turbulence that was going on in the global markets. So because of the large offshore exit, the shilling did depreciate. However, what we're seeing this year is that the shilling has been relatively strong, and this has been really supported by the FDIs that have been coming in, especially in the oil sector. Moving on to GDP growth, what we've been seeing is that the economy continues to recover, and we saw that for the last financial year, it did go up to about 4.6% from 3.4% the previous year, largely driven by the oil sector, but also the recovery in the services sector. We believe that this is going to continue being the trend, but we are unlikely to see it go to the pre-COVID levels of 6.5%, at least in the next 2 financial years. So going into the bond market, and this is where most of the funds are, you'll note that during the year we saw sharp rises in interest rates. And this was in line with the central bank policy. So definitely when the central bank increases the CBR, what we see is bond yields go up. But also because offshores were exiting, meaning that the liquidity in the market was tight, generally we saw a high rise in bond yields. What we are seeing this year is that some of these yields are starting to come down as inflation eases and shilling remains relatively strong. And because of this, our focus has really been to maximize return and actually go heavy into the long-term treasury bonds. Now, speaking into the equities market, what we saw globally and in the region is that our prices continue to drop, especially in Kenya, where we saw a huge drop. And this was in line with what was happening in the developed markets. With all this turbulence, what we saw is that offshores decided to exit frontier and developing markets to go and look for safe haven investments. So because of this, equities markets dropped significantly, and this has actually continued to be the trend even this year. Now, I'll move on to the asset summary, and this just gives an insight of where the funds were invested as at end of the year. What you will note is that the funds were heavily invested in government treasuries, which came in at 75%. You'll note that we have very little allocation in equities at just 3%. We did exit most of our equities the previous year, so we were lucky that because we had very little exposure in equities, we were not really affected that much by the fall in equities the previous year. The next slide just gives an overview of the return, and you'll see that historically we've been able to generate a return that's above 14%, and in the previous year, return came in at 14.38 against the benchmark of 10.32%. And this return was largely as a result of the good yields on government treasuries because, as I mentioned, equities didn't perform well, so the return on equities was actually negative. So lastly, I will just give a hint of where what our outlook is and how we are positioning the fund for this year. So as I mentioned earlier, we have been seeing that interest rates have been coming down as inflation eases and a relatively stable shilling. And we've also started seeing that offshores have started coming back to the market. So because of this, we believe that interest rates are going to continue dropping. And that is why what we've been doing for the first 2 quarters of the year is to actually focus more on treasury bonds when yields are still attractive. So we've been going heavy on treasury bonds. As far as the equities market is concerned, there's really not been a lot of action there. Our prices remain depressed. However, what we've been looking at is Kenya. Kenya has been hit significantly. And so we've seen some stocks in Kenya that we feel are very cheap to pick up. So we've been going in Kenya cautiously in some of these stocks like Safcom, and we believe that there's potential of the price rising over the next couple of years. Ladies and gentlemen, that's the end of my presentation. I'll stay on for the Q&A session.
Okay, thank you, Kevin. A round of applause, please. Okay, so, thank you so much. And as you heard from our fund manager, I think what's critical there to note is at the end of the day, they spend quite a bit of time ensuring that they're studying the market and exiting when they have to ensure that we don't lose any money, or if there's any impact, it's very minimal. So please drop your questions. Let's have them come in so that they're addressed in the Q&A session. So we will now move to the report from our administrator. Okay.
Thank you. I hope I'm audible. Okay. Good morning once again. My name is John Paul, and on behalf of the administrator, I would like to welcome you once again to this annual general meeting. I'll take you through the administration report of the year ended 31st December 2022. We'll just look at the scheme's compliance, we'll look at the contributions, we'll look at the exits, and we'll look at briefly the technology that we are using. And then at some point we'll look at what our role is as an administrator to the scheme. I'll start with the scheme structure that has already been pointed out by our trustee and then the other service providers. But key to this is also to emphasize the cost. We have a cost that we've put there, and all the service providers to the scheme take 1% of the assets under management. So when you look at the trustee, you look at the administrator, you look at the fund manager, all of them use 1% of the assets under management. And these are agreed beforehand. So what we do is that we make sure none of these costs exceeds what we have already determined. And that is why you will see that there are drops in the expenses of the scheme. Now, briefly on compliance, the scheme is highly compliant, and all the service providers to the scheme have compliance agreements in place. Thompson and Company did the audit, and I think there will be an opinion read to us subsequent to my presentation or the other persons. The corporate trustee is responsible for making sure that we adhere to the trustee deed rules which are in place. And these get amended depending on the need, and then also depending on regulation as guided by UBRA, and then also as guided by market forces of demand and supply, and how the pensions industry is steered. We have housing finance that has a custodial agreement in place. You have the administrator who has an administration agreement in place. And key to note is that all our participating employers have deeds of adherence that have been fully executed. Now, you note that on the slide there, we do not have a green on the deeds of adherence. And this is because when we were closing 2022, we had some deeds of adherence that were still being reviewed for members that were getting onboarded. And so we couldn't give it a green light because we did not have everyone having a deed of adherence. But key to note is that before any transactions can be made onto the custodial account and etc., then the deed of adherence must have been executed. And that is a high level of compliance that we talk about. Okay, this seems not to be... Okay, so a brief about contributions, and again, not to water down what the custodian has already stated. We had about 14.8 billion shillings come through in the year 2022 as compared to 9 in the prior year. And so you look at growth of about 37%. But again, if you break this down sector-wise, you realize that the NGO sector contributes the highest of all the contributions that we've had, and then I think followed by the financial sector. So one of the drives that the administrator has in place is to ensure that we diversify this portfolio. And one of the reasons being that with NGOs, there are a lot of contract expiries, projects coming to a close and etc. that may affect the stability of the fund if not handled early in time. And so you'll see much more effort being driven into ensuring that we diversify the fund and the structure that it has. To speak still to the contributions that we had 5 new members. Please join me in welcoming the 5 that joined our scheme in 2022. And these contributed 4 billion shillings. Okay, of the 14 that we had, our new persons contributed 4 of that. Not to again preempt what's happening in the space of 2023, you'll realize that we are going to grow more than that number this year because of the works that are already on the ground. And so we see the scheme headed for a brighter future. Now, that is in comparison to the 11 that came in last year. So we expect to have more than 5 this year. That will give us more than the 4 billion that we've had. And one of this is because there has been increased awareness about the role that the pension sector is playing in the retirement of people's lives. You know, retirement is very important. And for all of us who are here, in as much as we have these retirement packages that are provided by our participating employers, we may need to consider having our personal benefits, because life after retirement is a hassle if you have not planned for it. But it becomes very easy if you start early to plan for it, because you look at the health requirements and etc. and how this economy is spanning. You need to have a retirement package in place. Quickly onto the withdrawals again. Over the years, we've had an increase in the number of withdrawals that have come through, but so far the highest being in 2021. And this was driven by the COVID pandemic. And one of the other reasons is that we had so many of the projects coming to a close. Remember earlier we said that the NGOs contribute about 54% of the contributions that we had. And so that means that the same effect is felt when it comes to withdrawals. because we have so many contracts coming to an end, and you have renewals of people's contracts that are not coming through. And so with the levels of these withdrawals, we may need to again grow the fund so that this does not affect the ultimate return that we provide to our members. Now, in as much as we had 14 billion shillings of deposits come through, we also paid out 11 billion shillings in terms of withdrawals. But then of this 11, we had about 730 something million shillings that was paid out in form of interest. So also to let you know is that as an administrator, we must pay interest to persons who've exited before declaration. For instance, now we will declare interest today, and subsequent to this, we will have to now compute for all members who exited in 2022 and pay them the interest. And so it's also a requirement by the regulator that we inform them who has been paid interest and how much. Because then if there are any complaints, we need to be able to substantiate and say this is the interest that we paid you. And we also must do that with high levels of accuracy. And so that's why we'll be able to look at the technology that is being used to deliver these levels of accuracy and openness. Now, just to look briefly, we had the highest reason as to why members exit the scheme again is because they've resigned voluntarily. And then the next would be contracts coming to an end. So again, this speaks to the members that we have, the NGO world, contracts. So you realize that they are still coming down in the withdrawals. What have been some of the improvements that the administrator has put in place? What have been the challenges? What are we doing about them? Where do we see ourselves in the near future? I'll start with challenges, which are usually harder to talk about. One, we have delays in remittance of funds. Now remember, when we signed these deeds of adherence, we are supposed to be bound by the terms and conditions in there. One of them being that we should have funds remitted within 15 days after the end of the month. Now, we've had delays that have spanned even over a year. And in such instances, we have found ourselves taking the harder directions of involving the regulator to points where some people may end up paying interest. Now, what do we need to do for this one? We encourage all the participating employers to comply. We believe that if you've paid a salary, then there has been money that has been deducted for Provident Fund. Let's have that money come through so that the members also earn that interest in time. Remember, the interest every member gets has a time waiting are insufficient. Now, why this becomes a challenge is that our online access requires that we have your phone numbers and active phone numbers. So if we do not have that detail, then it becomes very difficult for that member to receive, first of all, the SMS alerts whenever there are deposits made. It becomes difficult for them to access our online platform and be able to extract a statement at any point in time. So it becomes very important that every time we have new members on board, we receive full details so that we are also able to serve them better. One of the other challenges we look at that we faced was having contributions made, deposits made onto the custodial account without any narrations. So for instance, I'll say if UAP deposited on that account and they just put match contributions, it becomes a little difficult to trace and say this money belongs to so and so. And so we encourage again the participating employers and everyone depositing money onto the custody account to have as clear a narration as possible so that we are able to allocate these monies quickly. Remember, we also have a requirement by the regulator to inform them of all the deposits that have been made in a particular quarter. And then also we need to inform them of which persons have not paid. So we might be fronting a participating employer as someone who's not remitted, and yet it's just the unclear transactions. So this makes our work also as administrators a little easy. Then lastly, I'll speak about the regulations. Now, there are quite a number of emerging regulations that, again, we'll continue to speak into, such as access to, I would mimic it to the midterm access by NSSF, where the regulators come up and said members can access funds for mortgage purposes and etc. And we have quite a number of persons coming through and saying, I want my money, and etc. So there is work to be done. We can't do it alone as an administrator, but collectively we can deliver this. So we need to continue to educate our members how, when these funds can be accessed, and then also we pledge to continue to support you whenever these come up. Those are some of the challenges we had. If there are any others, I will be able to talk about them in the Q&A session. Now, solutions, I spoke to these amidst the challenges, such as reconciliations per member and etc. We need the clear narrations coming through on the deposits. We encourage the members to send us full details for the staff. Key to this piece is to show you what our statement that has been modified looks like. Now, in the past, we've had a very consistent cry that we need to have a summarized statement. We need to have a very clear statement. Because with a very clear statement, there are very few questions that you will have. So our statement, like you can see there, will break it down for you and show you the month in which you first contributed. Now, the request we make is that if any member of the scheme receives a statement, please check that month. Because I could have joined UAP in January, and then my contribution is showing that I first deposited in October. Now, that's your first point of concern. You need to be able to raise it so that we sort it early. It could mean that there are contributions that have not been allocated. Now, the second part is to show you the contributions that have been made over the years, and we break these contributions per year. So you're able to follow through and say, I started contributing in this particular month, and so you'll follow through and say, in 2021, I had these contributions, 2022, 2023, with summaries there. What we are trying to do is to make sure that when we give you a statement, you're able to say yes or no to it. And where the answer is no, then we need to correct that early in time before any exit. Because we want to have extremely clear data, we want to have extremely clear exit processes, because that is where the scheme is tested. How fast can you pay someone, and how accurately can you pay them? So you have the deposits that have been made, then you have interest broken down per year. Okay? And then at the end of it, you have the totals. So just by looking at this statement, you're able to see how much you have. And for those who have made voluntary contributions, you will also be able to find that piece. We also continue to encourage members to take on voluntary contributions. They beef up how much you get whenever you leave the employment. Okay, so I will not speak much to the roles of the administrator, but key to note is that we manage that documentation. And what I mean by this is that we need to make sure that everyone is compliant. That is why you'll realize that it's the administrator who comes chasing after deeds of adherence and not the trustee. Okay, that is why you realize that it is the administrator who comes for the onboarding sessions. Now, the other key piece that we do is to manage records of all members within the scheme. That is why whenever there is an exit, it is the administrator supposed to process. So we start the process from the onboarding, and then we take you through how you can manage the funds and etc. But our role there is to ensure that all members' data is accurately captured, to ensure that any exit is paid within time and to the correct beneficiaries. And so to our participating employers, where we come to you and we are asking for clarity, especially where there has been death. Because remember, where there has been death, you're not paying to the person because they are not there. You're paying either to the estate, you're paying either to the next of kin. Okay, so where we come to you and we are seeking clarity, please support us to make sure that these funds benefit the intended persons. What are the rights of members within the scheme? One of the rights is to attend the annual general meeting like you have done. It is your right. The other right is to access any information about the scheme. So if you need to know anything about how the investments are being done and etc., it is your right to seek that. It is your right to receive a statement at any point in time, and that is why we've enabled access to everyone, so that you're able to do that at the comfort of your timing and place. It is your right to contribute voluntarily. It is your right to move in money from other investment schemes. It is your right to seek regulatory support in case you feel that we are not supporting you well on any matters. It is well within your rights to seek for that. It is within your right to be paid within 7 working days. Declared rates, historically, we had said we've done above market average. You forgive me, we've not put 2022 there. That's the role of the trustee to declare interest. I will not meddle in that. But you see a fund that is solid and can only continue to be solid. Technology, in less than a minute, we use a system called Fund Master, and it's the one that you can use to access your statement at any point in time. It's the one that we use to send you SMSs. It is the one that we use to manage the data. And this system has undergone several versions. Currently, we have the most optimal version that is now extremely stable. This I say with confidence because we've been in a worse place before. Once again, I thank you for coming for this AGM. I thank you, all of you are online. We'll take questions in the Q&A. Thank you.
Thank you so much, John Paul, who is our, the administrator. And I believe for a lot of the employers, this is who you interact with at the very beginning. This is the person that makes the initial contact. This is the person that usually responds to queries, from whether it's your staff. This is the person that you go to when you're inquiring about how soon you can get your money out if you're exiting a scheme. So the administrator is a key person in the runnings of the scheme, okay? And I think one of the key areas I want to highlight that he spoke about is really on the documentation. The deed of adherence. I think that is what makes the transaction, binding. There are key terms in there that are quite critical. Sometimes we do get letters or questions about whether someone can access their funds, but everything is actually in the deed of adherence. So we encourage the employers. You can even have sessions with your staff where you invite the administrator so that they actually take them through the deed of adherence. One of the things that we tend to see is the members, the final beneficiaries, sometimes are not very clear on what am I entitled to, when can I be able to access, and how much am I able to access, and things like that. But thank you so much for that, John Paul. We should have quite a bit of questions coming in the Q&A segment that then we shall address. We will now move to the auditor for the the financial performance, before we go to the opinion. So let's have that addressed by our auditors. Thank you.
Yes, thank you very much. Once again, for the benefit of those who joined us when we had started, Jerry Okulo is my name. I'm the Chief Accountant, UAP Life, and support the administration of the pension on the finance side. many thanks, and you're welcome, our members who are physically here, and those who've joined us online. We appreciate the time that you've taken to value this event. To our service providers, thank you very much for the hard work that you've always put in to ensure the success of the pension administration. So I have just a few slides where I'm going to speak into the financial performance of the scheme. I have an extract of the financial the statements of the scheme, and the auditor is going to be speaking to the opinion that was issued upon audit of the financial statements. So yes, it's 3 pages of content mainly. I'll just speak to the first bit in terms of contributions for this pension, and this is looking at 2022 versus 2021. We see contributions went up by about 59%, and this is represented by 36% employee and 68% employer. 2021 vis-a-vis 2020 was just about 3%. So yes, that speaks to the what our colleague John Paul had already mentioned in terms of the growth of the scheme. In terms of investment income, we had a 21% growth year on year, against 2021 of 60%. I'll speak to that, why we have only 21% against 60%. Withdrawals, 2022 was a significant hit, and as the administrator John Paul spoke to that, we had a number of exits from the scheme, and that gave us quite a hit in terms of 2022. That also then spoke into why our investment income then went down. In terms of fund growth, 23% growth against 27% in 2021, and that is also partly due to the withdrawals. So I'll now run you through the performance of the scheme in detail. That is going to be, I think I can use the pointer. Use the pointer. Yeah. Okay. Sorry. Let me just. I think the pointer is not working. Let me just speak quickly in terms of the performance. So you'll note the first part, we have contributions received during the year, which is broken down into employer and employee, with a total contribution of about 14 billion in 2022, vis-a-vis just 9.3 in 2021. That is a 59% growth in contributions. When you then go down to the withdrawals during the year, you will notice the withdrawals almost doubled. So in 2021, you had about 5.8. 2022, you're looking at 11.4, which was spoken into, and that is significantly because of the exits that we had during the year 2022. That then speaks into what we call the net additions from dealings with members. So you'll realize that 2022, actually, we had about 47 million deficit in terms of comparison with 2021. And that was because of the significant hit on the withdrawals during the year. Now, what then that means is what we are pushing in. So the investment income, which is now on the lower bit, it's the growth in investment income is impacted by 2 things. One is going to be the net additions from dealings with members. And then 2, we're going to also have what has been carried forward from the previous period. So let's say, hypothetically, let's say I have 1 billion shillings today, and then I earn interest of, say, 10%. That's going to be about 100 million. So now I have 1.1 billion that I'm going to roll forward and then earn money. But in the instance that, I get additional money, say, from the dealings with members, say 500 million, then I add it there, then I'm going to have 1.6 billion on which I'm going to earn interest. So that speaks into why now you'll notice that 2022, the investment income growth is slightly lower than 2021 because of the minimal additions from contributions from members. You'll also notice, so when you look at the notes 7, 8, 9, and 10, all those peak into investment income. One of the lines which says fair value gain or loss from quoted shares, that is the equities that our colleagues from the fund management department spoke about. Significant hit in 2022 because most of the equity counters saw a downward dip, and so we had losses coming through from most of those. I think looking at 2022, I think Umeme counter is the one which performed quite well. So you'll notice 2021 we had a loss, fair value loss of just 23 million. 2022 then it grows up to 105, and because of the prospect in the downward trend in terms of equity prices, it's why you'll see the lower line which says profit or loss on sale of equity investments. In 2021, we did quite a bit because we had to dispose of most of the equities which were poorly performing. That's why then you see, so 2022 still some disposals, but not as much as 2021. In terms of investment management expenses and admin expenses, those have already been spoken to very much by my other colleagues. But key to highlight is that those expenses, like my colleague John Paul spoke into, they are really a factor of the assets under management. So as assets under management go up, they go up. The assets under management go down, the expenses also go down. Members, then that leaves us with, so there is tax involved, that is on the government securities, the bonds mostly. That leaves us then with the net return on investment of about 3.7 billion. So you'll notice then overall growth in our fund is a contribution of the dealings from dealings with members of 3.4 billion, and then the return on investment after tax of 3.7 billion. So overall growth in assets under management or the fund over 2021-2022 period is about 7.1 billion, which is a 23% growth. Members, that is it about the 2021 performance. We also do have an update on the Q1 2023, which is as at March 2023. I'll just quickly speak into that. So as it stands now, March 2023, we are of course tracking well in terms of our overall contributions compared to 2022. Usually for the statement of performance, we do compare like to like. You may be asking why we're using March 2022, because we're using a 3-month reporting period on either years. So our withdrawals now cooling down, doing 62%. I know the month of March particularly had some huge withdrawals that contributed to that number of about 2.5 billion. But now we've stabilized, and then our dealings with members, of course, when you look at 2022 vis-a-vis 2020, rather when you look at 2023 vis-a-vis 2022, we are still tracking quite low in terms of the net additions because of the hit on the withdrawals. Investment income overall, that is I think maybe doing about 26%. We've not yet received any dividend income at the moment. 2023, we've also not yet disposed of any significant equities. Expenses still go in line with the value of the fund management, the assets under management. So looking at the Q1 so far, our net additions to the fund is about 1.4 billion. But there is a positive outlook, as John Paul has highlighted, and we expect to close the year with a great performance. Thank you very much. I think that will be it in terms of the performance of the pension. Thank you.
Thank you, Jerry. Members, you've had a view of what the financial performance looked like. Prepare your questions. in the chat. And for those that are here, we'll have the Q&A where you can raise your hand. But I think ballpark what he's noted is, yes, we did see some, the scheme was mainly impacted by withdrawals. And I think in the explanation earlier given by the administrator, these were mainly from the NGO, segment where you have contracts are expiring. And I think we did see a spillage of this also after COVID. You have people that are exiting the market, and that does have an impact. I think what's key to note, as seen in the March numbers, is there's work that the scheme is doing to ensure that we see growth coming in through the number of members, but also the assets under management. And you, our members, are actually also our best ambassadors. So we encourage you to also go out there and tell a friend to tell a friend, so that we can see the scheme grow. As that AUM grows, we have better negotiating power when we are investing, and then at the end of it all, we're able to actually get a better return. So thanks for that, Jerry. Our auditors, Thompson and Company, will give us the opinion from the 2022 performance.
Members, trustees, and other service providers, good afternoon. My name is CPA Moses Hakaiza, and I'm representing Thompson and Company, certified public accountants. And I'll go through the opinion, some of it verbatim, the rest of the content, I'll go through it because it is standard. On the opinion, we have audited the financial statements of UAP Life Umbrella Retirement Benefits Scheme, set out on pages 12 to 35, which comprise the statement of net assets available for benefits as at 31st December 2022, the statement of changes in net assets available for benefits, the statement of changes in members' funds and reserves, and the statement of cash flows for the year then ended, and the notes to the financial statements, including a summary of significant accounting policies and other explanatory notes. In our opinion, the accompanying financial statements give a true and fair view of the net assets available for benefits of UAP Life Umbrella Retirement Benefit Scheme at the 31st December 2022, and of its changes in net assets available for benefits and cash flows for the year then ended in accordance with international financial reporting standards, the scheme trust deed and rules, and in the manner required by the Uganda Retirement Benefits Regulatory Authority Act. Members, the rest of the information is standard, but I will draw your attention to the emphasis of matter. It was a correction made for the prior. It's not anything that is modifying the opinion of these accounts. Members, also to note, we do have a key audit matter. We did have a key audit matter in the report. As you turn to the next. Given the significance of the assets, we pay a lot of attention to ensure that they are correctly reported, they are rightly being invested per the IPS, the investment policy statement that is issued by the trustees. So we do a lot of confirmations from the custodians. We do engage with the fund managers to just make sure that what administrator is reporting is actually what is being held by the different service providers who are providing the service. Remember, the rest of the report of the opinion is standard, and maybe if I can draw you to the last page of the opinion. The engagement partner on the audit report resulting in the auditor's report is CPA Thompson Cuisiner of number P0216, and the audit report was signed on the 26th of April 2023. That's it from me, unless there are other questions. We also did issue a management letter that should have been shared with the rest of the members for information purposes.
Thank you so much, Moses. I just wanted you to just expound a bit on what true and fair means for our members that may not be from the audit background, yeah? So just explain a little bit further what true and fair really means.
So, members, thank you so much, Chair, for that. But in simple terms, true and fair from the audit perspective means we have not found anything peculiar that we need to bring to the attention of members that should make them fail to get sleep tonight or in the coming years. So as at 31st December 2022, we are happy that what the administrator read to you is what we actually confirmed.
Okay, thank you, Moses, from Thompson and Company. Yeah, I felt there was need to just re-highlight that. It's critical for you, the members, to just really understand what is true and fair. And as he's explained, it just really means that whatever is being given to you, the info that you had earlier, is true and is fair, and there's transparency in the running of the scheme. So that was very critical to highlight. Thank you so much, Moses. We now come to the part that you've all been waiting for, which is the declaration of the interest. Yeah, and I don't know if we have some drum rolls. Drum rolls, please. Our resident DJ, there should be some hype and drama to this, yeah? Or as the young people call it, vibe, yeah?
And the counting starts. 3, 2, 1, 0.
So our dear members that are here present and those online, the interest declared for the financial year ending 2022 is a good 12.27%. Yeah? Yeah. So a huge round of applause to our service providers. Yeah? And of course the members, because it's your funds that we invest that actually end up giving us this. I think key to note, despite the very volatile environment, we still managed to have a double-digit interest declared. So well done, everybody. Yeah. Okay, we now move to the second last, part of our agenda, which is now to hear from you in the Q&A segment. So if you are live here in the audience, you'll just raise your hand and someone will come and pass you the mic. And then our online audience, someone from UAP will support in reading out what the questions, yeah? Okay. So we can start perhaps with our present audience. Any hands? It doesn't have to be a question, even a comment is good. Okay, I see a question over there. As you ask a question, please tell us your name, which organization you represent as well. Thank you.
Okay, good afternoon, everyone. Thank you for the session. It's very interesting. We are happy for the interest rate. I'm called Faith Naivare. I come from Sinok Uganda Limited. And my question is going to Paul, the administrator. I've looked through his presentation and he said they had 4 companies join. Unfortunately, I didn't see myself. So my question for you, Paul. Thank you.
Let's take the online question as well, one online question, and then we can have them two questions addressed.
Hello, Dyrus. We've seen your hand. Kindly respond. Okay. Can you open your mic? Thank you.
My question, as an agent, I contributed money to the fund per month, but right now, as I want to exit the scheme, I've been told I must fill the clearance form. And yet, UAP does not contribute towards my monthly remittance. Why should admin first clear me before I get my money? I'm very afraid. Thank you.
Thank you so much. Sorry, what was the name? Fred. Okay. All right. Thank you, Fred, and thank you, Faith, for your questions. I believe both of them will be addressed by John Paul, the administrator. Thank you.
Thank you, Fred. I'll start with yours. Okay, so your question is, why must you fill an exit form and yet the employer doesn't pay for you? I'll answer this twofold. One, we have rules and regulations in place. And I want to believe that before you joined the Provident Fund, you must have been talked to by someone. Members, for you to know, Fred Dere is an agent with UAP Life. So the question maybe I would ask you is, one, whether you have ceased to be an agent with UAP Life, because there are guidelines under which, as a scheme, we are supposed to process benefits out. Now, again, for benefits of members here, I'll read this out. One is if you've been dismissed. Number 2 is if you've resigned. Number 3 is, let's say, if you've been terminated. Dismissal and termination can be used concurrently. If the person has passed on, okay, or if you've acquired the normal retirement age. Okay, so the purpose of this scheme, and one of the reasons that we, I think, get issues is that under what circumstances can someone exit the provident fund scheme or the pension scheme? It's only when you have left employment of that particular participating employer. That is the key piece. If you have left employment or attained retirement age. Now, leaving employment is split amongst some of those conditions I gave. One being termination, resignation, your contract has expired, and etc. And so, Fred, the reason as to why you're being asked to fill that form is so that the participating employer in their records can confirm that you have actually left employment of whatever nature it is. It is also a regulatory requirement for us to comply with. Otherwise, everyone would come and ask for their money every day, and we would have to pay. That is one. Now, for Faith, I would defer this to Brita. Sinok not appearing as one of the new members.
Thank you so much, Jenko. Faith Sinok joined in Q4 2022. However, reporting that to the regulator, we reported in 2023. However, Sinok joined in 2022. Yeah.
So, Rita, can we confirm that their first contribution was in 2022?
Their first contribution was in 2022 in December.
Okay. On behalf of the administrator, please take our apologies. Sinok should have been included as the 6th member. And so we correct the report to state that we had 6 new participating employers join the scheme in the year 2022, on top of the other 5 Sinok included. Thank you.
Okay, I see 2 more hands over there. And Sinok, thank you so much for joining the scheme. We look forward to a great partnership.
Thank you very much. My name is Margaret Adong from Fawe, Uganda. I don't know if this goes to Paul or the entire committee. As employers, there is a challenge, especially when employees are exiting the organization. When there is debt, for example, they have loans they have to pay, or they have a deficit they have to clear with the organization. Our observation is many times the remittance is made directly to the employee, and then it gets very challenging for the employer to be in position to attain their monies back. Severally, we've reached out to UAP to support us in this, and we have been informed that it is not acceptable as per the regulations. So then at this point, I would then want to drop the ball in your court to simplify the work of the employer, especially when it comes to this. How do you then support the employer to be in position to attain their monies back? That is one. Then two, John Paul made mention of records management. However, there is still a challenge that we have found with many of our staff. They don't get accurate reports, and then also the reports come in late, or when we ask for them, that's when they are sent, and many times or sometimes they are not only accurate, but they are very unclear. So I don't know how you can support and improve in that area. Thank you very much.
Thank you, Margaret. Let's take another question. I saw a hand.
I don't know if it's still a good morning. Good afternoon, colleagues. My name is Samuel Aikomo. I work with Self-Help Africa as a finance officer. I have two issues. One, I think I direct it to the chief accountant. I stole something in your presentation where you were comparing interests declared for 2021 and 2022. I saw something like 12 point something in 2021, but I think that was not, if I recall, the interests that were declared last year. It was not 12 as you are comparing, so I don't know if you presented exactly what was declared, or you are going to revise our statements. Secondly, because since you've already now told us that that was it, compared it to what we received last year. Secondly, I've always got quite a number of questions from some of my colleagues, whether it is possible. This is just, I'm seeking for guidance from you. If an employee wants to raise their contribution, say by 20%, and still maintain employer at 10, is it allowable? Thank you.
Okay, I think we can take those. So Jerry, you can respond to the first one, and then John Paul.
Okay, I'll take from Margaret. I hope I'm audible. From Margaret, the first question was, you have employees who exit and possibly have obligations within the organization. And previously, let me take you a little back. Prior 2019 there, what we used to do was send the money back to the employer, participating employer. And I think everyone was comfortable. But again, you realize that there has been an increase in supervision and adherence to regulations and etc. And in one of the audits that the regulator did, this came through, and they're saying that you must strictly adhere to the regulations and guidelines. And one of the reasons they were stating that is that the fundamental reason as to why these pension schemes have been set up is to provide some income to a member once they have left employment. Now, of course, we understand that that challenge exists. And one of the reasons is that for some of our members, once they understand that your pensions can't be touched, then some of them may go into illegal things that get them fired. They know their money is there, including stealing and etc. The guidance that we have always got is that circumstances are different. Now, there are cases that we have referred to the regulator, and there has been guidance provided, because again, we do not want the participating employers to be losing out money because of, I would use the word, indiscipline. Okay? The easiest would be for the scheme to pay the person, and then they pay to the participating employer, but that is usually difficult, especially where you've parted ways on bad notes. Now, under such a circumstance, the guidance that we have always got is let the participating employer write the circumstances under which this employee is living, how much they owe, and in most cases, they will ask you to prove that particular amount you have put. And then you can send either to the administrator, to the trustee, or to the regulator, or you can send to all of us and copy each other in. There is direction that has been provided. Remember, fraud is illegal, and we are bound by the laws of the land. So anything that is illegal then attracts penalties and etc. So the regulator will be able to support you on that. Okay? I know it's not a satisfactory thing, but as an administrator, I would be lying to you if I said that we are going to pay the participating employer without authority from the regulator. Okay? So the best approach is write this down, document it, let's share it with the regulator, and then we get a way forward around that. It is one of the most contentious issues we deal with in management of this particular scheme. It is not the first time, and we know it will continue to happen. So as we wait for firm guidance on laws, regulations, because these are just based on practices that are ongoing, we would request that even before you submit the exit form or etc., let the regulator be aware. Remember, you have something that we call vesting. But members' funds can only be vested for 2 years, though that is outside the question. What I'm trying to communicate to you here is that if the particular member went to UBRA and said that they have left service of, let's say, FAWE, and that they have informed the administrator, but the administrator has refused to pay, we shall be compelled to pay that money, even without your consent. But if the participating employer has written to the regulator and said that these are the circumstances surrounding the exit of, for instance, John Paul from FAWE, and John Paul did ABCD, he owes the company this kind of money, this is the evidence, we need support to recover this, then we cannot be compelled to pay John Paul. Okay, we cannot be compelled. Even if I go to the regulator, they will tell you, look here, you have a pending case with us. So that direction can't come. So the best approach is to document, share as soon as the person leaves. Because if they beat you to the regulator, by the time you get there, maybe you've processed the money. That is one. The second question was accuracy of reports. There are delays in them coming, they're unclear. That is one of the reasons as to why we showed you the revised statement. I don't know if you've had a chance to look at yours, because it is already operational. That is one. The second thing with regards to people's statements is that we've provided the online platform. We understand there seem to be some challenges for some members to access, but we'll still pledge we are available to support whenever that is needed. Now, with regards to the statements, the reason that we provided, again, the online platform is so that you can access at any point in time. Any member should be able to access. Us sharing the statements with, let's say, the contact person, and then the contact person has to share it with the members, seems to take some time. It's easier if everyone has their own access. And then also the SMSs come in handy. So, Margaret, I would request that if you're having any of these challenges, then it's possible that we need to relook at the data that we have for the scheme, okay? And this is an ongoing exercise. It will never stop, because also we are cognizant that people's phone numbers change. So wherever someone has changed the phone number, we also need to do the same. Otherwise, they stop to receive any of these communications from us. I'll go to Samuel. Interest shown in 2021. Jerry, you will answer this one. I am not. And then, if it is possible for an employee to increase their voluntary contributions to 20%. You will correct me if I'm wrong, but the regulation requires you to be at 15% maximum. Okay. Now, if the employee wants to go to 20%, then they need to declare to us that they have an additional source of income where 20% of their salary does not equate to 15% of their total monthly earnings. I don't know if that then becomes a bit clear. With 2021, Jerry.
Yeah, thank you. If you noticed, I didn't actually speak to the interest declaration before the trustee did. But yes, 2021 was actually 12% declared.
Rita, you can confirm that?
Okay, maybe some clarification. 2021 was declared in 2022. Is that correct?
Yes.
Thank you. We'll double check and get back to you properly.
Please do, please do.
Okay, as we take the next hand, yeah, so just to reconfirm, yes, it was indeed 12%, and it was declared in the AGM that was held in 2022. Yeah.
My name is Mgwanya Derek. I work with Christian Blind Mission. Thank you so much for the great work you've done. My issue is on the user interface of the system that we are using, the online platform. It does not give comprehensive information in terms of the breakdown of the different months that members have been contributing. Time and again, we've always come back to UAP actually to provide the statements to us. And yet ideally, as a member, I should be able to see what my employer is contributing to the fund. On your side, I appreciate you. I think you're able to see. But on our side, we are not able. What we are able to see is just the summary, the amount contributed, the total amount. But the breakdown of that total amount is not there. Thank you.
Derek, just to reconfirm, so just as an example again, if you have a January contribution, you're able to see just the total of, let's say, 400,000.
I'm unable to see the total contribution to date.
Okay, so Derek, I think we'll need to just do a training because you can actually see that. So what we'll do is show you exactly how to extract that particular piece. You'll be able to see.
Actually, I've interfaced with that system. I've gone through the breakdown because it is very clear. The different ways, like all those, the pages are there. You just click on the page, click on the dates that you want to be displayed and all that. But still, it does not appear.
Okay, that is Christian. Okay. Because the reason I state that is that for most of the other members, they are able to see the breakdown. So that means that if it's happening to you, it means there is something different about your setup that we need to check. But as the system is set up, you should be able to see the breakdown of those amounts. Now, if you're not able to see, then we will just interrogate your particular scheme and see where the challenge is coming from so that you're able to benefit. I take that as an action point. Thank you.
Okay, thanks for that. So I think one of the key actions from this AGM for the administrator will be, I think, to interact with some of the employers and just confirm if there are any others with such issues. Then they can be able to actually take you through how to access. I wanted to speak a little bit about Margaret's comment on the loans, because you did ask for some advice of also how to go about it. And indeed, yes, the law doesn't allow you to, you can't receive the funds on behalf of the person who was contributing. But I think in your exit process, it is something that you can, try to either document or highlight. If someone is exiting the company, you have a checklist. So if they've got loans, one of the key questions is, okay, so how are you going to be able to pay us back? And sometimes it's at that stage where you're able to have that negotiation and agree, then get them to sign something that is actually, of them agreeing that maybe I'll contribute maybe 20% from my profit towards reduction of my loan. I think if it is documented, if I'm not mistaken, then that's okay. I think the issue is you cannot force the person to use their funds. Yeah. Okay. Any other questions from our online audience or?
Thank you. My name is Tom Oketz. I'm from Perth. I have 3 questions. First one goes to John Paul. You talked about cases where you're actually able to execute payments to a member without the clearance of the contributing employer. one, I would like to know then where does the clearance form come in? Number two, do you have some timelines upon which requests from contributing employers should stay with the employer, and thereafter you are mandated to clear them without the clearance of the contributing employer? The other question is really, I don't know who to address it to, but maybe to the trustee or even to the administrator. What is the relationship that the different trustee representatives from the contributing employers have with the different service providers, more specifically the administrator and the trustee? What level of engagement should the contributing employer trustee representatives have in terms of level of engagement? Because as it is now, it looks like there are just some representatives there in the back, and they don't even know what their role is supposed to be, what level of information they should have. So maybe just a little bit of clarity. And then also would like you to clarify for us over and above the investment streams and efforts that you do for that scheme, what other support do you as a fund manager or the scheme administration have for the contributing members or even the members themselves? We engage with you at this level once a year, but what other support? Different organizations have different challenges. They could even be having circles that they require investment advisory, but we only interface with you once a year, and for the better part of the last 2 years, it's been virtual. So what other services do you have or advisory that you can give to the members so that it's not just about we receive the money and wait for the interest after 1 year? Thank you.
Okay, thank you so much, Tom. Say, Tom, you're from PATH, correct? Okay, thanks for that question. Is there any other question online that we could take? Okay, so couple of questions there. I think there's the issue of execution of payments, but I think maybe it could have been misinterpreted, but John Paul will address that, and the issue of timelines. I think I can speak a little bit about the relationship of I think you talked about the internal trustees and then, this panel here. But my understanding is that I think PATH is under the umbrella, correct? So you actually don't have in-house trustees. Probably you have what you would call maybe staff representatives, but ideally you run under an umbrella which is governed by the structure that we spoke to earlier, the trustee, the administrator, the fund manager, who then help you to run the scheme. However, in terms of any information or interaction that is required, should be channeled through the administrator. So the representative from the employer side, whether it's the human resource manager or it's someone on the finance side, all those specific staff representatives, then they can reach out through the administrator for any questions at any time of the year. It doesn't have to be during this AGM, right? The support, I think some of the additional things that can be done is in the area of course, there's training, there's financial literacy. You've talked about SACCOs, and I believe that is something that is key on the agenda of the administrator. You should see more of them, more of that kind of activity happening. But that's the extra support that can actually be given by the administrator. Yeah. Okay. I think John Paul, you could address the other. Yeah.
Okay. Thanks, Tom. With payments now, I think the clarity you need is that first of all, under one of the rights of a member that we showed was that you have a right to be paid your benefits within 7 working days. Okay. Now, one, the reason as to why we introduced an exit form is for us to have confirmation that this member has actually left employment of this particular participating employer. And that is why you realize that we require someone, for instance, from human resource or finance or the managing director or something, to have endorsed that form. Now, that is the normal exit process. We have exit processes where someone, for instance, if someone has been terminated, as an example, they've been given a termination letter, but then the participating employer has, let's say they have a date with the participating employer, and because of that date, they have failed to agree on the exit form. Okay? Remember, the exit form is twofold. The person exiting has to sign, then the company also has to sign, and then send it through. Now, there are instances where the representative of, I'll give an example, hypothetical, Path, has not signed because of one or two negotiations that haven't gone right. Now, this member, because they know their rights, then they go to the regulator and say that I exited Path and they have refused or are adamant to sign my exit form. This is proof or confirmation that I have left employment. Now remember, what we are looking out for is that you've left employment. Now, when they go to the regulator, then the regulator will write to us and tell us that you have this particular case. Have you handled it? What are the details? Now, what we do as an administrator is write to you and tell you that we have this particular person who has given us this, and we are mandated to process to them within 7 working days. Then we ask you for the exit form. Okay? Now, if Path does not respond, as an example, we will go ahead and process the money. If Path responds and says that we have obligations and etc. that must be dealt with by this person, then we will ask you to also go to the regulator and do the same. Now, whatever the regulator tells us to do is what we go with. That is scenario one. The second scenario is where some people just abscond from work. Someone can take 3 years without being at work. Okay, they run away. Now, when they come back, and you can clearly see from their statement that this person last contributed 3 years back. Okay? If they come to us and say that I left services of this organization and etc., and there is confirmation, then we will notify you, but proceed to pay. Timelines, 7 working days. What level of engagement? She's spoken to it, but then also key on our agenda this particular year, it has already started, is to empower all our participating employers with as much financial literacy as possible, because you can break down people's needs in terms of finances by age brackets. You realize that those who are, let's say, between 18 and 25, you need to speak to them in a different way. Those who are between 30 and 40, you know, there are different packages that we have as an administrator or as UAP that we are rolling out. And then also, I don't know if you've been able to see some of these newsletters that we are sending out. For instance, if it is World AIDS Day, we'll send out an extract. If it's World Malaria Day, we'll send out something like that. Those are coming in. And if you've not got, or if we have anyone on this call who has not yet received, please send us the email addresses to which you would want these particular communications to go through. I don't know if I've answered you. Okay, thank you.
Okay, thank you so much. Do we have any other questions? Yeah. Okay, we've got 3 hands up.
Thank you. I'm Everest from Teach for Uganda. My question is, if an employee left an organization and is joining one that has a provident fund that is not managed by UAP, would they be able to transfer their funds to that fund, or they would have to withdraw their funds?
Yes, they can transfer the funds to that particular scheme.
I think because we interact, like my colleague said, once a year, maybe there are quite a lot of issues we have to discuss also. There are two things. One for Pauline, I think the interest took up my mind and I'd forgotten, but I've remembered that now that you are, because that has also been coming from quite a number of staff, and it's important that I get feedback for them. That since housing finance is the custodian, if someone wants to get, say, a mortgage loan, will housing finance acknowledge that, yes, I know this person and this person has their money in our custody and can guarantee? Secondly, there is an issue that disturbs us also as an organization. That is the issue of staff like who exit before they've reached their probation period. And from our interactions, we know that once a staff exits, a staff is entitled to only their contribution and not organization's contribution. But I think the issue that everyone keeps asking is, what happens to this organization's contribution? At what level? When do you let these organizations know that the 10% you contributed for staff A who left before, say, their probation period is now at this this is what has happened? I think we really need to get some clarification on that. Thank you.
I think there was a third hand over here.
Thank you, Chair, and the entire committee. My name is Zipporah. I work with Palliative Care Association of Uganda. I actually didn't see our name there. We got on board last year in October. So I seek clarity on the members that have exited the fund, the scheme, before declaring interest. You said you'll compute and actually let the employer know that you'll pay these people. I would like to know the process of getting them paid. Are we going to actually write to you again and ask that you should pay them like the process we did when those people were leaving, or it's just paid automatically to their accounts? Thank you so much.
Pauline, would you want to take the mortgages first?
Thank you. Thank you for the question about the mortgages. So if I got you right, you're asking if a member from your team can approach the bank for a mortgage. Yes, it's possible, but maybe I'd just like to bring some conditions to your attention. The law provides for mortgages for your first property or renovation of your first property. So as Housing Finance Bank, to grant you the loan, we need, first of all, to vet the staff and confirm that they have a good, a credible borrowing history. Also, I would require that the person holds an account with us where we'll be making recoveries, because much as you have savings in the umbrella, we'll need to be making recoveries for the tenure of the loan, which will not just be your saving in the umbrella. Your umbrella saving basically is like collateral, if I would put it that way. In the event that you fail to meet your payments, that can be a fallback. And also, just to put this into perspective, the law is very, very tight on this saving. It's not that because you say I can't pay, I'll just invoke, the saving and come to UAP and say, administrator, so and so is defaulting, pay. No. there are channels of recovery that have to be followed, and that the saving is really, really last resort. It's almost untouchable, if I could put it that way. So we'll have to vet you ordinarily like normal borrowers are vetted in the bank. And maybe the difference would be if you came as a group, there's also a different arrangement for that. We have schemes where we set up schemes for different employers. And given the already underlying relationship, we can make maybe certain considerations and then lend to the members. I hope that answers your question.
Okay, I'll start with Zipporah's question of do we come back to you? Yes, we come back to you, but for a different reason. What we come back to you on is, one, to confirm that, just before we get there, so after we've declared interest, we will run a list that shows us all the members that exited within the year and how much they're entitled to. Now, after we do that, then we segment these and say, these are for palliative, these are for path, these are for faraway, these are for self-help. Okay. Now, after that, then we send that particular list to the different participating employers and we say, please confirm that these are all the members that exited within that particular year. And then we also attach the amounts that are payable to them. Now, we also attach for you the account numbers to which the first funds were paid. Okay. Now, the reason we do that is also to confirm that these account numbers have not changed, because people change account numbers every day. Now, we'll ask you to confirm if those are all the numbers, and where you want us to demonstrate the accuracy of the amounts, then we also do that. We could sample if there are many, or we could do for all. So we come back to you just for confirmation that the people we are paying are comprehensive. That is why we come back to you. And then also to confirm the numbers. But we don't ask you to come to us and say, now I want my members paid. No, we will come to you instead. Though we span that over a period of about 1 to 2 months, because you do not want to withdraw all the amounts on one day from the fund. And then also we space ourselves so that you don't miss out anyone. Samuel, staff exit by probation period, what happens to their money? So again, because of regulations, we are unable to return that money to you. But what we have done as a scheme is that if there are monies that have been unvested, if I use that word, then in the subsequent months, when you're contributing, you can contribute less. That's what we've been doing as we engage the regulator on if there are better avenues of dealing with that money. Because remember, we don't want to retain money that is unallocated in the scheme. Okay? So what we've been doing is that we tell you this is how much has been left by so and so because of the vesting scales that apply. And so on your subsequent contributions, you could pay less that amount of money so that it's fully allocated. Everest, I think I had answered your question, that you can transfer funds from one scheme to the next. Have I left out any question? Thank you.
Okay, thank you all. There's another question? Yes.
Okay, good afternoon, everyone. My name's Grace Naiga. I work with TPO Uganda. First of all, I'd love to say a round of applause to everyone in front there, the administrators, the trustees, for the job well done. One of the things that before you go further, one of the things that I've noted in this discussion is that with the participating employers, we need to be more proactive and engage the administrator. Because the number of questions we are asking is like, we meet once here in a while, but it's also our duty to keep engaging them on so many occasions, because we represent a number of people out there, and sometimes we may not have the answers to the questions, but let's not wait to pile the questions until the time now as it is. So I think that's the way forward that we should go on, that we should engage them. Me as an individual, actually I've been engaging UAP, I think. Most of them, there are people who know me by names, but they don't know me by face, because I've been engaging them now and again. Because staff questions are, sometimes they need to hear from the people who hold their monies. And with all the digitalization of the getting the statements, I believe we'll need to have a refresher on the training on how people get their online statements, because it has been a challenge to most of the people. That should be done. But I'm so glad with how the look out of the statements are, because they really show what one party contributes and what the other party contributes and the total for each month. In line with that, with the appreciation, I would love to have clarity. Paul mentioned about the delay of payment of funds, remittance of the monthly funds. So my question is, how does this affect the interest? For example, if I was supposed to pay the remittance of maybe March remittance and I pay it in April or May, how does it affect the interest of, even if it's still in the same participating year, how does it affect the interest of that year? And the other, if it's not in the same participating year, for example, if I was supposed to pay in December of 2022 and I paid it in January, how does it affect the interest that you've declared? Because these are some of the questions that people are going to ask. How is it calculated? How is this going to be emulated on their statements? Thank you so much.
Okay, very good question there. And thanks, Grace, for the comment around the need for engagement. I think as people managers, I think that's the most critical part, that you also want to you want to encourage the members to know what's going on with their money. Now with a self-help portal, is go back and actually ensure everyone is able to access. Otherwise, that's what sometimes keeps you guys busy, because someone is walking in, I want to see my statement, but there's now a self-help portal. So indeed, one of the actions is we'll do a round where we sensitize everybody so that they know how to actually access and have the power in their hands. So that even at the end of the year, someone already knows. It's just like, I think, NSSF, every month you get like a text message, right? So you know how much you have actually invested. But I'll let John Paul take on the other question.
Thank you, Grace, for your comment. We appreciate. Now, the delay in remittance of funds affects you this way. The funds, for starters, earn interest as and when we receive them, from the date we receive them on the custody account. Meaning that if I've had someone's 1 billion for 365 days, okay, that person is going to receive more interest than another party whose billion I've had for 30 days. I think it just goes back to principles of investment. I don't know. So there is a time weighting that we apply to the interest, where in as much as it's annual, we break it down to daily interest. Okay, so now, like we've done 12.27%, that's an annual interest rate. Now, what we are going to do is go back and break this interest into daily rates. So you realize that if you had a contribution on the 1st of January, it's going to get the full 12.27%. If you had a contribution on the 31st of December, it's going to get 1 out of 365 of 12.27%. And so when you pay the contributions early, it means that you give yourself more time. You give the funds more time within the scheme to again make more money for you. But if you take longer, then it means that you're denying yourself interest for those days. Now, if December 2022 was paid in January of 2023, it means that that particular contribution will not earn or participate in this interest, but rather it would participate in interest declared for 2023. And that is how it works. Thank you.
Okay, thanks for that. And I think sometimes the employees might not know that you remitted late. So they now start asking, they write to us and they're asking for the money, that the things, the math is not mathing, yeah? But, then the employers don't actually acknowledge that, you've skipped 2 months, but the employee doesn't know. So I think, yes, it just goes down to the principles of, look, if you're meant to contribute on a monthly basis, try as much as possible to remit the members' funds as early as possible, okay? Any other questions? None? Are we happy? Yeah? We're good? Okay, fantastic. So if there's no AOB, because we didn't receive any matters that the members felt they needed to include under AOB, unless the administrator or the sponsor has anything they would like to add. Rita, anything? The regulator would like to say something. Okay, all right. So our regulator would like to address us. And this is a very good thing because, again, the regulator is one that oversees everything that's going on. So let's have a word from them. You're very welcome. Ubra.
Hi, Solome. You're welcome. Kindly give us your remarks. Thank you. Chair, if we could maybe answer some question, the online questions. Harrison, kindly ask your questions. Thank you.
Okay, you hear me? Thank you. You hear me?
Yes, Harrison, we can hear you.
Okay, thank you all. Thank you, our sponsors. Thank you, our trustees, custodians, and UAP. Now, mine is a quick question. When I see the declaration, it is 22-23. It may be confusing. Is it? I thought we are running calendar year, whereby the declaration is for 22. If I see 22-23, are we running April, March? I need that clarity. And as well, are we going to send messages immediately to all associates? Thank you. I'm Harrison Chugun Sipla, Head of HR.
Thank you, Harrison. John Paul?
Wow. So the financial year is supposed to be 2022. We run calendar years. I think the 2023 was just to say that we've had this AGM in 2023, but it's for 2022. And then with regard to SMSs, yes, we are going to send SMSs. But because it's a Friday and we are almost past what we do, those will go out early next week. Thank you.
Thank you, JP. Esther, the floor is yours. In the meantime, Salome, are you on?
Yes, I am. Sorry, I stepped out of it. Can you confirm that you can hear me?
Yes, we can hear you.
I can't get you clearly. Can you hear me? Okay. My name is Solomon Amono. I'm representing the regulator in this AGM. I didn't see our slot on the agenda, so I just waited for the opportunity that you would offer. Good afternoon, members on the call. I would like to take this opportunity to thank the members for attending the AGM, but also thank the organizers of the AGM, who I believe are the administrators, and the other service providers for steering the scheme. Congratulate members on the interest declared. It's nice to have a double digit, given what was going on in the economy. So congratulations, members and the trustees. I would like to assure members that UBRA closely monitors UAP umbrella, and that the scheme is well managed and it's compliant. I'll talk a little more about members' rights in this AGM. I feel as UBRA, we need to speak more to the members than to the service providers, especially in AGMs, because we have very many other forums where we interact with the service providers and trustees. I'm going to highlight a few of the members' rights. Given the questions that have been asked, I get a feel that the participating employers and members may not clearly be aware of what their rights are. One is the right to contribute to the scheme and to know the contribution rates that you're supposed to make, the rates that you're supposed to, that are supposed to be used to deduct your contributions to the scheme. A member has a right to know that, but also to make these contributions regularly. Most of us who are from occupational schemes, these are the participating employers. The employer takes charge to deduct this money from you and submit it to the umbrella. But if there are any voluntary contributors, we encourage you to do this regularly and by every 15th of the following month. The other right that I want to bring to the attention of the members is to know where your assets are invested. This is normally done through the fund manager sensitizing members, telling them, like I saw in his presentation, we've invested in equities, we've invested in treasury bonds. So as members, it's good for you to be aware of that. The other thing is about attending annual general meetings. From the log, I'm not sure how many are attending physically, but I see very few online. So members have a right to attend, but also to be given timely notice to attend these AGMs. When you attend the AGM, you get the feel of the scheme. You get to know what's happening in the scheme. You get to ask pertinent questions. You get to contribute to the growth of the scheme because you may have ideas. So I'm encouraging members to tell a friend that did come for this AGM today that it's your right to attend, and always spare some time to attend the AGM. The other is about the costs, the operational costs of the scheme. As a member, you need to know what is being spent in the scheme and take keen interest, because that affects your interest. The service providers have put it to us that we are spending at least 1% of the assets under management on operational costs. Do we understand this as members? Do we understand the implication? So I'm encouraging you to take keen interest in the operations of the scheme. The other right is access to information. We had a member that was talking about not receiving statement, but anytime they have received, they've just asked for them. Then we also had one that was asking if they can make voluntary contributions. Some of these things are stipulated in our trust deed and rules. So as members, let's take time. Let's get interested and ask for some of these documents. Read them such that we know what to ask for, we know what is going on in the scheme, and we know when to expect statements and from who. The other right is, just to add on the information, is about the vesting scales, the period within which you can access what you have contributed and when you can forego what the employer has contributed. I am happy some members were asking questions regarding contributions of the employer. Where do they go when I leave? That shows us that people are taking keen interest. But I'm employing others that don't know about this to also try and exercise that right of reading. Get information, read, and be able to contribute to the scheme because it's your scheme as a member. The other right is about dispute resolution mechanism. In most of our trustees, we have dispute resolution mechanisms stipulated there. How many of us as members know what to do when we have a dispute? UBRA as a regulator has a complaint desk. How many of us reach out to the regulator to say, okay, I have this problem and I need to be sorted? So as members, we have a right to complain. But what is the mechanism that we are using to complain? Have we taken time to read our documents, especially the trust deed, to know how we can complain, how we can have this settled. So I'm encouraging you to read more and get interested. The other is about assignment of benefits for mortgages and housing loans. There is a member that asked Pauline if they can guarantee them and using their benefits. UBRA issued assignment of benefits regulations of benefits for mortgages or loans regulations in 2022. And these stipulate who qualifies for a mortgage and up to what percentage can your benefits be used to access those mortgages. So as members, let's try to read this information. These regulations are on UBRA website. The scheme administrator can be of help if you need them. So take time to read them and see if you can be helped. Of course, through the trustees and the administrator. But also as members, much as we have rights, we also have obligations to these schemes that we belong to. One of the obligations is for you to nominate beneficiaries. We've had complaints as the regulator where we have people passing on, and then probably they were still young, they nominated girlfriends or sisters, and then they've grown up, they have families. The trustees are normally caught in the middle. You know, this person has a family, has this child, but the person that is nominated is different. So we are encouraging members that when you're part of a scheme, always update your information. You have exercised your right to nominate beneficiaries, but as things change along the way, please update your information. And you can only do that if you're in touch with the scheme. If you're not just a member waiting for interest. The other right is making regular contributions. We are happy that most of our participating employers deduct this from our salaries. But we encourage the voluntary members to also try and make regular contributions. The other obligation is your financial obligation with the employer. We had one of the participating employers asking about a member who leaves, and then they have done probably something wrong with the employer. It could have been embezzlement or something, but they claim they need to be paid their money. As UBRA, our mandate is to protect members' funds. But we are not encouraging you not to meet your financial obligations with your employers. You're obligated as a member to meet your financial obligation. If you know that you've had a problem with the employer, please settle it before you claim your money from the scheme, to avoid the back and forth of the regulator intervening, the trustees writing. Settle it before you claim your money from the scheme. In conclusion, I would like to extend our gratitude to the sponsors of the scheme, the participating employers, the trustees for managing the scheme, and the service providers that have supported the scheme. I once again congratulate you on the interest declared, but also encourage that we make more additional voluntary contributions. This is our money, and we are saving for retirement when we will have nothing to take home at that time. So members, tell a friend that didn't attend this AGM that we can always increase our contributions to the scheme because our retirement package will be bigger then and we'll be able to live a comfortable retirement. Thank you for listening. Back to you, MC.
And actually engaging with you and giving guidance where necessary. So thank you for that, Salome. I believe we've cleared all the questions that were in the chat. We've cleared the questions of those that are here present with us. So it's been a long 2.5 hours or so, coming to about 3 hours. But I think it was much needed. It's taken us about 3 years to have a hybrid event. So once again, I thank you, members, for making the time to be here present with us. It shows your interest. Please go back and thank your members for us, but most importantly, sensitize them around the self-portal, around their rights, so that, ballpark, everyone has an idea of exactly what happened, okay? So once again, allow me to congratulate you on the interest, the double-digit interest of 12.27%. Samuel, it's 12.27%, yeah. For the financial year ending 2022. Thank you so much to all our service providers, and thank you to the sponsor. They have prepared some nice bites for you guys, so you are not going to sit here all through and not have something to eat. So there is something for you to have after this. Thank you all so much, and have a wonderful weekend and a wonderful 2023. Thank you.